Good evening, everyone. Welcome to our IQI Canada evening talk. It's that time of the year again. We are back with our monthly economic update with none other than Shan Saeed. So I'd like to welcome Shan Saeed to our IQI Canada evening talk. Welcome, Shan, and Happy New Year to you. How are you doing?
Thank you, Yusuf. Good morning from Canada. Happy New Year to you. Always excited to be part of this. I am fantastic. Getting into the full gear. New Year started. It's good.
So good to see you, because especially, when the new year starts and like throughout the year, we do get an economic update from you about various countries and what's happening with different, economic outlook for different countries. So it's very important for us to also understand like what's going on because this kind of information, helps our investors to make a very informed decision. As it's all about the real estate market, and Canada has been going really, really hot. We had a rocking 2021, and it seems like the 2022, since we have started already, it's getting hot. Though the weather is still cold, it feels like minus 17, minus 18. Last week we had a big snowstorm, but still, but the market is still getting hot.
That's very good to hear that you had an excellent year. All credit goes to you and to your team for making simply fabulous turnaround from 25 million to 200 million. So it's like, you have achieved your dream. So hats off to you. Hats off to you.
Thank you. It's always a dream work on that. Having said that, Sean, what I want to talk about before I get into my subject. For last few days, especially, obviously the whole year I've been seeing you, but last few days I've been seeing you a lot is happening in terms of you being on the media and things like that. And today, I was just looking at it, and then it said, oh, this Sean is going to be on this economic, talk, which is going to happen, which has happened today. So tell us a little bit about the economic talk.
Yes, Yusuf, this is a think tank called KSI, run by Tansari Michael Yo in Malaysia. So every year they start the year with the economic outlook of Malaysia. For the last 3 years, I have been invited. I share my thoughts on regional economies, Malaysian economic outlook, and about global economy. So it's a great honor for me that every year they send me the invite that Shan, you have to come and I share my thoughts. So this year is online. Last year was online. 2020 was, in person. So it's a different
Right.
feeling, but still I enjoy my sharing my thoughts with on this prestigious platform.
Amazing, amazing, amazing. And also, I would like to know is that the economic club, what's this all about? Because I saw that, the think tank, the economic club, forward economic outlook. Could you just tell us a little bit about the economic club?
2009, I was walking in Central Park in New York, and I was talking to my friend that one day I'll form a think tank for Pakistan because in 2009 I attended Brookings Institute think tank and Cato. So these are those think tanks that are quite famous in US. So along with my few members, we have initiated this think tank in Pakistan. The purpose of this think tank is to provide policy papers to decision makers at the government level and at the senior level so that they can look at these policy papers like they do in US, and it gives forward guidance what government should be doing. Right now, if you see Pakistan, it's having macroeconomic stability issue. So how we can overcome that, how we can make a policy for oil, how we can make policy for manufacturing, how we can export manpower in various locations around the world so that we can earn foreign exchange like we did in 70s. A lot of people went to UAE and Saudi Arabia, and we earned a lot of foreign exchange in 1970s and 1980s, and everybody was saying Dubai chalo in 1980s, if you recall.
Yeah, that's right.
So we want to create along with my team. It's totally a volunteer service. A lot of people have asked me that Shan, can I join this club? I am very sociable and very approachable, but at the same time, I prefer limited people who understand my chemistry, who understand my level of thinking, and who are on the same page as I am on many issues in Pakistan. So this economic club would come out with policy papers. We will have videos, webinars like you are doing, live stream, and we will send these policy papers based on pragmatic approach, no fancy talk, backed by data, based on critical reasoning, and above all, I always believe it is a substance that counts. Why I get so much of limelight in Malaysia? Because I share substance. Nobody's interested in Cinderella stories or James Bond stories or tabloid stories because it's like a waste of time, and nobody has got time to waste. So when I go and speak in public, I share with my audience that I respect my audience. An audience would only listen to you if you have something meaningful to say. If you start sharing jokes and other stories, that's a huge put off for the audience. So the main strategic intent of this economic club is that we need to share substance, we need to share data, and how we can encourage government or the policy makers at the highest level to think differently.
Congratulations for that, and I wish you all the best. And I'm
Thank
sure
you.
with your team, this is going to be something very, very helpful for Pakistan. Having said that, Shan, let's get to our question. It's a no Cinderella story, so let's get right away to one of our questions. So, Shan, the global economic outlook. Uh, looks challenging and uncertainty has entered into the landscape. We have recently witnessed that Brent oil policies have gone up almost, correct me if I'm wrong, 13.78%. Year to date is about 88.75 per barrel. What's the premise, and share your insights about your interview published, I think, in the Star newspaper. It was on January 10th of this year. And also, please explain the backwardation phase in the oil market. I'm very curious about it, that I've observed you using the term often.
Yes, Yusuf, oil market, as you rightly pointed out, is trading at $88.75 per barrel. Brent is up 13% year to date, and markets continue to stay volatile at this point of time when I speak. Geopolitical risk is one of those risks that we have been sharing since 2016. And now geopolitical risk is getting very deeper into the market. And that is a concern for many investors. If you pick up yesterday's Financial Times or even Wall Street Journal, they are talking that consumers globally will have to pay more. So, just imagine IQI is sharing that oil prices for 2022 will be between 77 and $107 per barrel. Goldman Sachs talking about 120, $140 per barrel. JP Morgan again talking about above $100 per barrel. Economist magazine again talking about the average prices will stay above $79 per barrel. So, when you are standing with these global players on the same page, and press and media, they are looking and they are comparing your insights with others. That's how you build your credibility and integrity in the market. That, whatever you share is backed by facts and figures.
Yeah,
No tabloid stories or no James Bond story. Nobody has got time. And
that's
my
right.
nature, I'm very straightforward, I'm very blunt, and I'm very outspoken. I'm right to the point. I don't have time to share stories. I feel it's like a waste of time. So I think geopolitical risk, depreciation of US dollar, and there will be a supply constraint moving forward that will keep oil prices on the upsurge. So when oil prices are on the upsurge, obviously global economy will not recover very fast. In our last interview, if you recall, when you were in US,
Yeah.
that oil, because of higher oil prices, global economy will not recover before 2025. So some people were saying that by 2022 or by 2023, uh, oil prices will be lower and we will see global economy recovering. I think that's a false premise. In my opinion, global economy will not recover before 2025. So next 2 to 3 years will be very, very challenging. Yes. And how you navigate through these tumultuous and challenging times You have to be prepared, and you have to make a plan, a strategy. If you have make your if you have made your plan in advance, obviously you're going to succeed. But if you have not planned, yes, it will be a tough call. So I think geopolitical risk is a main concern for the oil market. As far as backwardation is concerned, it's a very simple terminology used in the oil market. What is backwardation? When your spot price, when your current price is higher than your future price. What does
Mhm.
it signify? It signifies that consumers or the investors are worried about future, so they are trying to get their hands on physical oil. So the present, the spot price is higher than the future. So that carries a huge message to the market that oil prices will stay higher for the next 6 to 9 months. And as I shared with you, oil prices at Juwai IQI, we are expecting between 77 and $107 per barrel. The chances of oil prices going higher looks pretty solid at this point of time.
So we should be expecting the oil prices continue to grow. So that brings me to my second question, Sean, which is like, so the oil prices are on the rise. This means that inflation will continue to show its head. Globally, inflation is rising all around, especially in advanced economies. What's the outlook for inflation in next 6 to 9 months, and how do you foresee that?
I still remember in US the inflation numbers were 1.7 in February last year,
Hmm.
and the media, the mainstream media, started talking about that. This inflation will be curbed. By May, Janet Yellen and Fed Chair Jerome Powell said this inflation is transitory, is temporary, it will be going very soon. So they were talking about August, September. I was on Astrovani, May, June, live program, and I said this inflation is serious. This inflation is not temporary. It is not transitory. I said I have lived in US for 5 years. I know how the system works. I know how the Fed actually communicates with the market. This inflation will remain for the next 2 years. May 2021, and now we are in almost February 2022.
Wow.
Inflation is getting serious,
Yeah.
and inflation from 1.7 it has moved to 7%. But I have been talking to people, especially in North America, especially in New York and Chicago. How do you calculate inflation? Inflation is not 7%, it is more than that. The
Yeah.
thing is, the basket of goods that the Fed measures, it is not correct because you spend 50% of your salary in grocery items in oil.
Yeah.
How many times you do you purchase furniture every day? How
No, we
many
don't.
times do you purchase car every day?
We
How
don't.
many times do you purchase laptop every day?
True.
How many times do you purchase all these fancy stuffs every day? No, not
No, you don't.
every day.
Yeah.
You buy food items or you buy
Yeah.
oil and gas. And oil
Yeah.
and gas last year, oil was up 57% and food was up 32%. But
That's right.
Fed is saying that inflation is 7%. So it's a huge schism. It's a huge disconnect. Oil 57%, food 32% year to date, and you are saying inflation is just 7%. So I think in calculating inflation is perhaps one of the most difficult things to do. It's not very easy. And in my opinion, inflation will remain for the next 2 years.
Wow. Wow. So that means the affordability is going to be, getting difficult for people because at the same time their salaries and their income has to go up along with that. Because the way you're calculating about the inflation, you very rightly said that it's just not we're not buying cars every day, we're not buying laptops every day. What you are doing on an every month in and out is your grocery and your oil. I mean, I've seen that the groceries have really, and in the oil we have seen that as well, witness that is going up, and groceries we have seen the same thing. They have gone up as well. So as you rightly said, I think the inflation, it's and for next 2 years is something which we have to look for it. And at the same time, as you always say, the cash is king, or you got to be putting your money in the right assets as well on that. So that brings me to my third question, Sean. That chain is moving today with all the questions are interconnected to each other. So with oil prices high, inflation is serious and stubborn. We can easily decipher that the interest rate would go up. The question on everyone's mind is in this year is that can we year end can we expect the interest rate touching 1% or 1.5% as Fed? The U.S. central bank has indicated to its hawkish stance. What do you say about that?
Yes, definitely. Interest rates would rise, and when interest rates would go up, obviously you only increase interest rate because you are worried about inflation. But the challenge is Fed has been behind the curve most of the time. So how to control inflation is not going to stop. It's a runaway inflation in US or in advanced economies. Juwai IQI, JP Morgan, Bank of America, Goldman Sachs. We are all on the same page. We are expecting four hikes this year. So by December 2022, interest rates will be between 1.25 and 1.5.
Okay.
Yields that you are talking about right now, the yields are 1.77, 1.78. Yields
Mhm.
would be between 2.5 and 3. Obviously, when the interest rates would go up, investors will demand more premium on the bonds. So the 10-year T bills will be trading between 2.5 and 3. So because the Fed is worried about this runaway inflation, obviously it will make a huge impact as you pointed out. Grocery items in US previously 3 years back, if you have only $75, you can easily buy your grocery. But
That's right.
now you need $150 to $200 to buy your grocery. So just imagine, egg prices up 12%, wheat prices, bread prices up 15%, chicken prices up 24%.
Wow.
But you are saying to the market that it is only 7%. So where is, either I am wrong on mathematics or I think I have zero knowledge about arithmetic. I don't know how to calculate quick maths. Your chicken prices are up
Yeah.
24%, egg prices are up 12%, bread 12%, but your salaries are not going up by that percent.
True. True.
So obviously consumers are going to have a huge impact of this inflation, and once consumers will have huge impact, I would not be surprised because of higher interest rates. Advanced economies, especially US, Europe, and UK, they might go into recession. And recession is not a business cycle, recession is a consumer cycle. When consumers
Mhm.
don't spend, the
Yeah.
businesses don't invest, the economy actually shrinks. Obviously, when your inflation is high, it will make an impact on consumer spending.
True.
Consumers will cut down on the spending, businesses will not invest, obviously, economy is going to shrink. So, the only concern that many economists and many banks have, and they are saying that are we heading for recession in advanced economies, because inflation has got serious, it is stubborn, it's not going to stop very time soon.
True.
And once you increase interest rate, it takes good 12 to 15 months of that higher interest rate, if Fed increases 25 or 50 basis point, to make an impact on the market. So it is not like you raise interest rate by 50 basis point and
Yes.
inflation will go away after 1 week or 2 weeks or after 1 month. No,
Mm.
not at all. It doesn't work in that fashion. It takes good 12 to 15 months. That's a time period, time frame for that higher interest rate to make an impact. So I think with Fed increasing interest rate, and Fed looks worried,
Mm-hmm.
and when Fed is panicking, obviously the markets are going to panic. And when markets are going to panic, we have seen just Friday, investors lost $1.2 trillion dollars in the equity markets alone. Just in one
Wow.
day.
Wow.
$1.2 trillion dollars, that is roughly the size of Indonesia's GDP. So when interest rates would go up, the two asset classes that would take the hit, my favorite asset class, debt market, and the equity market. And surprisingly, we have been talking about the
Yeah.
debt market and Warren Buffett, that Warren Buffett said in many of his interviews that debt market is the worst asset class to be in. You're earning 1.775 on your T bills, 10 years, and the inflation is 7%. So
Wow.
effectively you are negative.
That's right.
your income is 2 and your cost is 7, so you are negative by minus 5. So you're not earning anything on your bonds. You are you're losing out on bonds. So I
That's
think
right.
what Warren Buffett has been saying, that cash is king, and cash gives you financial and economic empowerment. Many people will disagree with me, that is fine, but you know what Warren Buffett is doing, and his financial strategy is, when you have cash, you can enter into the market and you can take position in those asset classes where valuation is very attractive. So I
Yeah.
think interest rates should go up. I think by March we are expecting, and then we will have four interest rate hike by year end.
Okay.
Fed will take the interest rate to 1.25 to 1.5, and once Fed raises the interest rate, that will give forward guidance to many central banks, especially Bank of Canada, Bank
Hmm.
of England, European Central Bank, and Bank of Japan. They will eventually increase the interest rate and they will follow course.
So you said absolutely right. Whenever the Fed interest rates goes up, the Bank of Canada, the Bank of England always follows that, and that's what we've been hearing. And there's a lot of talk going on about the interest rates lately. For this coming monetary policy meeting, which is going to happen. So my final question to you is that we have a monetary policy meeting which is coming up in Canada. What's your view about the Canadian market outlook for this year?
I think Canadian, you have asked me two questions. One is the monetary policy question, there is
That's right.
the market. The monetary
That's right.
policy question, as I shared with you, Bank of Canada normally follows the Fed, and when Fed raises the interest rate, Bank of Canada, it follows the same. So I think eventually Bank of Canada will raise interest rates. As far as market is concerned, the market looks very attractive in terms of real estate. Yes, you have to encourage your investors to take position before the interest rates go up. Obviously, the cost will go up. But as far as the overall market is concerned, as you said, 20 outside weather is very cold, but the market is very hot. I think
That's
the
true.
market will remain very hot. There are a lot of immigrants who are moving to Canada. And why Canada? Canada has really done a remarkable job in terms of a branding. Safe
Yeah.
country, political stability, macroeconomic stability, healthcare services, education, in terms of living standard. Canada at par,
Yeah.
with US, Europe, and UK. So I think Canada will stay very, very attractive, and that's why Canadian market will again remain very hot despite interest rates going up. And I think you will be busy again in 2022. You will be busy again, I can tell you, in 23 as
Discuss.
well. So
Okay.
2022, 2023, despite interest rates going up, uh, investors, those sophisticated and smart investors who understand history and economics, they always take position in real estate and gold, tangible assets. I have repeated this word so many times that it comes naturally in my mouth. So I think sophisticated and smart investors who are looking at Canada, they will take position. Immigrants who are moving to Canada, they are already aware that Bank of Canada will raise interest rate, but they are still willing to take up that challenge, and they will buy properties, they will buy other asset classes. Equity and bonds will remain under pressure, but tangible asset class, oil, gold, silver, arts, real estate would be on the global investors' radar going forward. And I think 2022, 2023 would be very, very challenging. But at the same time, in every challenging situation, there are opportunities. And how do you prepare yourself in those opportunities? That's an art.
That's true. That's true. The economic, when you're talking about the real estate, especially, 1.2 million immigrants still expected to come. We haven't seen a lot of those immigrants were supposed to come in 2021 due to pandemic. Most of them have not yet come. A lot of students who were supposed to be coming are expected to come by September, May of this year. A lot of students who have graduated are waiting for their PR card. They've already given their 3 years of work permit. So when it comes to the real estate part, 100%, interest rate. A lot of people have been thinking that maybe interest rate will make a difference, but the way the market is going on right now, Sean, as you rightly mentioned, is that because it's all about demand and supply. The demand is still very high, supply is very less. Let me give you an example. I was just looking at some of the listings in Mississauga altogether on the MLS trap system. It's only 150 listings. I mean, 150 listings all over of the Mississauga. It's nothing. And normally you would see at least close to between 800 to 1,000 listings around this time. So you could imagine that what kind of a shortage is going on right now in the market. Every property we're putting on, we're getting like multiple offers. And believe it or not, I just want to share a little experience with one of my our agents. And they put up a property in Markham, you know uh, for 699. They got an offer for 855, and next day, the deposit did not come in. So the agent called me up and said, "So the deposit is not here. What's going to happen?" I said, "You know what, the market is so hot, let's wait for a couple of more days, you will see what's going to happen." So we did a mutual release, what needs to be done. Sean, in next one day, we got another showings, about 10 or 15 showings, and we got an offer on the same property for 880,000. So imagine
Wow.
855, we were happy, the seller was happy. And then once, one opportunity which was probably, they changed their mind, it always have buyers have a little bit of cold feet. And they thought maybe they're getting to the market, it's too quick and soon. But then the next buyer actually went way above the price, what was already been put into the market. So that is, that's showing you the demand. And we were going to hold offers for this particular property. And it has happened, like recently we have seen that we're trying to hold offers, but before we even hold offers, there is people are already looking into market. The reason is that because buyers have been so active in the market. Interest rate is definitely one of the factors for it. Second thing is that also, people have seen a lot of huge equity which is built up from what they bought in terms of a townhouse to a semi-detached to a detached. Average prices coming up to almost close to 1.5 to 1.6 million of the detached home. We've seen an increase of almost over like 25 to 27% in 20 from 2020 to 2021. So I think like you as you rightly mentioned, even with the interest rates going up, taking a little bit of hike, we at here IQI Canada also see the same. What you're saying is that we will probably continue to be seeing in the busy of 2022 and 2023, because I think immigrants is going to play a major factor along with the people coming in.
Yusuf, I have captured one word that is very important, especially in the asset class, and that is shortage.
Yeah.
Listings are 150. Previously, you said listings were 850, 900. So
Yeah.
there's a huge shortage coming, but the demand is very strong. So when you don't have enough supply and the demand is up, obviously the prices will go up. So I think
Exactly.
it's a very ideal opportunity for those buyers and sellers. Again, it runs both streets, that they can make money at the same time they can save money, because as you
That's
said,
right.
prices are going up and they are moving at a very fast pace. You do one listing and you have 6 to 7 offers. So I
Yep.
think that's a very healthy sign. Interest rates hike or no hike, market will continue to stay strong because not enough supplies. And your word is very important, shortage. Because of
Shortage.
shortage of supplies, the demand is very strong and it will remain strong. That's why I said, we are not talking about 22. You'll remain very busy in 23 as 2022, 23, and 23. You have to plan your vacation in advance. Where should I go? So, I come back to office as soon as
That's true.
possible.
That's
So
true. That's true. That's what.
I think I
Yeah.
wish you good luck for
Thank
this
you.
year and for next year as well. And I'm very confident the way you have led your team, you will continue to perform and you will outgrow your numbers with your strategic insight and with your leadership qualities.
Thank you very much, Shan. You play a very important role in terms of our making those informed decisions for our investors by the economic outlook. I follow Shan Saeed on LinkedIn. I follow Shan Saeed on Facebook. Believe it or not, if you guys are not following up, please do that. Shan is every day have something in the news going on, and he's being called up by different medias which are calling Shan on that. So he's the man to follow. Thank you very much, Sean, for another amazing IQI Canada evening talk. Really, really appreciate that. Please take care of yourself and enjoy your the rest of the day, and hopefully we'll see you soon for next month.
Thank you, Yusuf. Thank you for having me. Good luck to you.
Take care. Bye bye.
Bye bye.